What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So there were some issues with the internet yesterday. I had to call Discernity. They fixed it. So I'm going to go over some cheap dividend stocks for you to check out for February. I do own some of them. Some of them I may rebuy. This is just a list of solid dividend stocks. And remember, dividend growth wins all the time. So I'm hoping my Yield Max ETFs and Defiance ETFs buy the ones that I own. I'll tell you which ones I own, which ones that are on my radar. These are in-demand companies. So anytime I buy a dividend stock, it better be in demand. Okay? So if it's not in demand, for example, Starbucks isn't cheap, but, people buy coffee from Starbucks all the time, almost daily. People I work with in healthcare, they go get Starbucks. They DoorDash Starbucks. They go downstairs and get Starbucks. It's just it's a very in-demand company. So these ones are for sure. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check these cheap dividend stocks out right now. So the first dividend stock is Pfizer. It's sitting at 27.08. A dividend yield is 6.20%. A PE ratio of 72.45. Average volume is 47.73 million. The market cap is 152.90 billion US dollars. G range is 25.76 to 44.46. Day range is 26.78 to 27.51. Previous close is 27.02. Pfizer is an in-demand company. Many of their products they have are needed for the hospitals. Many of they have the Pfizer vaccine. They also have that little, I think they have like a combination with GlaxoSmithKline. You can correct me if I'm wrong, for the RSV vaccine, which is recent. I'm kind of surprised they are not giving us that in healthcare, because I can tell you, working in the hospital, there's a lot of hospitalized people with RSV. I may have had that, actually. I didn't test myself. I isolated myself for X amount of days. But I still have a dry cough. And I can tell you, I never had a fever or anything. May have been RSV. And my endurance is finally getting back there, which is great. But, that's something that's in demand. So, a lot of products they have. It's amazing the diverse sick population, asthmatics, people that have hypertension, people that have history of strokes. It targets a lot of populations, and the vulnerable population. I mean by target, like it has products that people need, even psychiatric. So that's another thing. They do have medications to help people with that. So that being in demand is very important. So I'm going to jump to their revenue trends and dividend history. So here's their revenue trends. Okay, I'm going to do 2016, 52,000. This is annually in millions US dollars. 2017, 52,546. 2018, 40,825. 2019, 40,905. 2020, 40,000. 41,651, 2021, 81,288, and then 2022, 100,000. Then it dropped down to 58,000. I'm going to be honest with you, it could be a strong correlation with the COVID vaccine. Not many people are getting it. But the other thing is, they still have some very competitive products. So I'm happy with the increase in revenue from 2016 to 2023 overall. So I'm going to jump to its dividend history. And for being a cheap dividend stock, a high yielder right now, above 5%, here's its quarterly dividend history. So 2013, it was 24 cents. 2014, it was 26 cents. 2015, it was 28 cents. 2016, it was 30 cents. 2017, it was 32 cents. 2018, it was 34 cents. 2019, it was 36 cents. 2020, it was 38 cents. 2021, it was 39 cents. 2022, it was 40 cents. 2023, it was 41 cents. In 2024, it was 42 cents. So the number of dividend increases in the last 5 years is 5. Dividend growth in 5 years is 3.04%. That's still not bad. If you bought one share, you made 168 with a 6.22% dividend yield. That's still attractive for me. This is why I'm buying them. I'm going to jump to the next dividend stock. Next one I'm going to go over is VICI Properties. It's sitting at 3012. This is a real estate investment trust. Average volume 6.12 million. Remember, funds for operation is very important. The market cap is 31.16 billion US dollars. Year range is 2663 to 3507. Day range is 2993 to 3063, and its previous close was 3024. So another thing about them that I really like, if you look at realty income, they're 54.39. American Tower is very expensive, but this one's a very competitive. This is like an experiential REIT. I went over them. They own they're a landlord for casinos, hotels, racetracks, golf courses, and actually 38 bowling alleys. That was a recent acquisition. This is around the United States and Canada. So they are getting bigger and they are getting more powerful. So I'm going to jump to the revenue trends and dividend history. Now, I already went over FFO in numerous videos, but the funds for operation are pretty strong with them. And there's an increase in revenue. And the nice thing about real estate investment trust, 90% of what they make go back to investors. But the only problem with a real estate investment trust is if I make $500 this year with VICI Properties, I have to report it as actual $500 in income. So that's one thing I get taxed on. But a lot of people, not me, but a lot of people put REITs in their IRAs, and when they receive the income from VICI Properties or other REITs, they don't get taxed on that. So that's one thing. And again, you can correct me if I'm wrong. So annually in millions US dollars, 2017, 187. 2018, 897. Ooh, look at that revenue increase. 2019, 894. 2020, 1,225. In the pandemic, they're still going up. 2021, 1,509. 2022, 2,600. That's exciting with the increase in revenue, but what's even more exciting is its dividend growth history. Annually in millions US dollars, 2018 it was 16 cents to 26 cents to 29 cents, and then 2019 it was 30 cents. 2020 was 30 cents, and then all of a sudden, and then in 2021 it hit 33 cents. Then in 2022 it hit 36 cents. 2023 it hit 39 cents, and the start of 2024 it hit 42 cents. So it's understandable why I've been loading up on them. You're seeing the dividend growth, you're seeing the revenue trends, and it's a cheap dividend stock. Dividend growth in 5 years is 8.66%. So if you bought one share, you made $1.66 with a 5.49% dividend yield. It's pretty attractive. Now, let's go for one more dividend stock. This one I don't own, but I'm considering buying. This one is known as Invitation Homes, INVH, that's a symbol. Sitting at $32.93. So they're a publicly traded company, and they are, the average volume is 3.11 million. The big thing is they're in 16 markets, and I did a video on them recently, 83,000 rental homes. So that's one thing that's really attractive. The market cap is 20.15 billion US dollars. Its year range is 2849 to 3653. Day range is 3287 to 3366. Previous close was 3308. So that's the one thing. And I'm in an apartment complex, and they're increasing rent each year. Their funds for operation appear pretty strong. And I'm going to jump to their revenue trends and dividend history. So with REITs, show me the money. I want to see the money. I want to see the revenue trends. Funds for operation have been pretty good with them. But this is annually in millions US dollars. 2014, 658. 2015, 836. 2016, 922. 2017, 1,504. 2018, 1,722. 2019, 1,764. 2020, 1,822. 2021, 1,996. And 2022, 2,238. So this is a big increase in revenue. I love it. And I'm going to show you its dividend history. I'm going to start in 2017. It was 8 cents. 2018, it was 11 cents. 2019, it was 13 cents. 2020, it was 15 cents. 2021, it was 17 cents. 2022, it's 22 cents. 2023, it's 26 cents. And then in 2024, it jumped to 28 cents. So you're getting a dividend growth in 5 years of 19.07%. This is why I'm really attractive to them. So don't be surprised if I buy them before I reveal to you my strategy with my 5 dividend stocks in the pie chart that my pie that I have. This would not be in it, but it's very attractive. And again, look at it compared to my business development companies. This is jumping up pretty quick, dividend growth wise. Number of dividend increases in the last 5 years is 6. So if you bought 1 share, you made 112 with a 3.39% dividend yield. I own the first 2. This one, I'm not going to confirm if I'm going to buy it yet, but this is high in my radar. Do not be surprised if I buy them. I'm providing my rationales with my 3 dividend stocks that are very attractive for January. I would consider all 3 of these cheap. Dividend growth is very solid with VICI as well as this one. This one is extremely attractive. Just going to let you know. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Tomorrow, I'm going to reveal to you my dividend income. It's going to be exciting. So you guys take care and have a good one, and I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use this YouTube channel for any form of financial advice. This is strictly for entertainment purposes only. If you're looking for financial advice, it is best to seek financial advice from somebody that is a financial advisor. Do not use this YouTube channel for any form of tax advice. So do not use this for tax advice. It is best to seek advice from, again, a financial advisor, somebody certified to give financial advice, and or somebody that is certified to give tax advice or a tax advisor. Those are the people you need to go to. This is my dividend investing journey. I'm very transparent. I'm going to be long in Pfizer. I'm going to be long in VICI properties unless if something drastically happens, dividend cut, reverse stock split, something crazy. So I just want to be clear with you on that. Investing is a big risk. You can gain money, you can lose money. So be aware of the risks and make sure you do your due diligence in anything that you invest in. Doesn't matter if it's stocks, crypto, whatever you do. There's always a risk. So take care and have a great Dividend Warrior Wednesday.